can use cryptography to ask questions. Does David Lee have 10 tokens to transfer to Malik? The answer is yes, then I can transfer. So, but the entire ledger is shielded. So the other thing that you should know is that blockchain can be transparent and can be shielded. So there are two types of blockchain. Okay, so it's important to understand that, so that you don't you know that. But if you want to be shielded, what is the opportunity cost? Even more inefficient, right? So the design thinking is such that we are achieving extreme inefficiency to solve the problem that we're trying to solve. So blockchain, it is not for production efficiency. So what sort of efficiency is blockchain trying to achieve? That is the question. The answer is called collaboration efficiency. Blockchain is trying to allow untrusted party to work together. And the token economics is about using the token as an incentive for untrusted party to work together so that the interest is being aligned. So one of the most important design thinking in blockchain is that all the interests of everybody who are untrusted and do not know each other have to embody in the entire network. Because if you don't, this bottom-up innovation will not take place. The design thinking must allow it must be empowering the community. It must be empowering the weak. It must be empowering the neglected. It must be empowering the people who are in need. Okay, so that they have incentive to join this network through the tokens. So that is the key to the design thinking behind blockchain. Okay, so this is very important to understand why this is for financial inclusion. Okay, so you can read that later. And there's private blockchain, there's a public blockchain. The difference is that in private blockchain, whoever joins the network has to be authenticated and has to be permissioned. Okay, so if you need no permission to join and you're not authenticated, okay, you have KYC problems. But that is open blockchain. Okay, so that's open blockchain. But once you have a KYC and you give permission, then become a private blockchain, and it can be a consortium of banks, and it can be fully private within the bank for thousands of branches all over the world using the same blockchain. Okay, so that is a private blockchain and a public blockchain and consortium blockchain. Okay, now blockchains are distributed ledger technology, but not all distributed ledger technology are blockchain. So this is important, and also not all blockchains have transparent ledger. Okay, so remember this. This is very important because this is key to it. So, well, blockchain is irreversible value transfer, okay, while respecting the privacy of the counterparty. Either the nodes are anonymous, okay, or the ledger is anonymous, or you can have both the nodes, the user, and the ledger both anonymous. Now that will give regulators a huge headache, because if the ledger is anonymous and the nodes are anonymous, then how do you know I'm not using it to do human trafficking? How do you know that I'm not using it for drug trafficking? So it becomes a major problem for regulators. But hang on, there are solutions for that. Okay, we have already talked through all those, and China are very good. The China authorities are very good in that. Okay, I will review to you towards the 3:30 session of how do you regulate or how do you prevent human trafficking, pornography, drug trafficking, in terms of regulating blockchain. Okay, but direct the blockchain towards financial inclusion and e-inclusion. That is the key thing that we are here today. Okay, so the ledger based on cryptography that stores and secure tokens such as cryptocurrency, identity, ownership, user rights, smart contracts, digital game items. I will talk about smart contracts in a while, and other digital assets with all associated history in sequential blocks, and new opportunities for inventing new ways as part of the solution to solving financial inclusion problem. And this is why I'm here today. And the ledger is inefficient, as I mentioned to you. The tokens is for exchange of value and for incentives, and the incentive system is to align interests. So now you understand the blockchain is for untrusted party to work together. Is production inefficient, but collaboration very efficient. Okay, and this is what it is. So AI and other technology are usually for production efficiency. Blockchain is for collaboration efficiency, and it is a trust machine that enhances collaboration efficiency among untrusted nodes through consensus. And I will explain that in more details. Okay. So the so-called distributed innovation models is what we are looking for. For years, we have a lot of problem as far as ADB or World Bank is concerned that capital are not available to emerging market cheaply. And the reason why that's not the case is because the opportunity of mistrust is very, very high. If you mistrust somebody in an emerging market and they don't have very good enforcement power, neither do they have a very efficient court system, even if you can go to the court and win your court case, you cannot enforce the judgment. So in that situation, right, the opportunity cost of mistrust is huge. And therefore, I require a higher return on my capital when I invest in emerging market. How do we solve this problem? How do we ensure that capital is available cheaply to emerging market when the justice system or the enforcement system are not as efficient? That is the problem that we are trying to solve here. And that's the problem that World Bank and ADB have been talking about for years. Okay? And the answer lies in blockchain design, okay? Smart contracts. And how do we do that? Okay? Now, there are a lot of examples of social innovation, collaborative initiative in the open context, in open data, living lab, urban mobility, and so on, which I'll elaborate later. Okay? And it is actually a grassroots civil innovation. I will give an example of what that means. Okay? There's a community effort, systematic innovation that will happen over time. Because as we know now, more and more distrust with the current financial system, and we can see in a lot of countries that there are a lot of loss of control with that, and blockchain is trying to bring that back. Okay? And the user innovation can be seen as a way to better link disruptive and cumulative innovation to achieve systematic innovation. But I'm not selling you the idea that blockchain can solve all problems. In fact, blockchain can solve only a few problems, but it can solve a lot more problems with other technology. Okay? But by using other technologies and the convergence of technology, which is a session that I'm going to talk about in 3:30, you will introduce other problems. Okay, so as regulator, we need to think through how we can solve all those problems, and that is the 3:30 session that I'm going to talk about. Okay, but here, what I'm trying to say is that open innovation open innovation essentially focuses on profit, user innovation on user well-being, social innovation on society improvement. Autonomous organization under certain circumstances can be more efficient than the government organization, business organization. And this is what Singapore is promoting. Efforts from the community to design blockchain with convergence of technology to serve the underserved. Okay, how do we do this and where did this come from? This came from Elena Ostrom in 2008. 2008, two major things happened. One, she's the first female academic prize winner, okay, and she's not an economist, she's a political scientist. She works in the area of the solution to the tragedy of the commons. Okay, with common resources, people would all tend to exploit these common resources, and you've got to find ways to incentivize them so that these common resources will be used efficiently. So it's about common pool resources, it's about how to reduce the cost of trust, it's about how to entice people to cooperate together to solve problems, and this is very important for institution analysis, social ecology system, and so on, right? Collective self-governance. And this is unfortunately she passed away a few years after she got the Nobel Prize. But her work lives on, okay? And Satoshi Nakamoto is a digital version of her work. So if we look at the white paper of Satoshi Nakamoto for Bitcoin, it's actually encumbered all the thinking of Elena Ostrom into the virtual world. And she was talking about the physical world. Satoshi was talking about the virtual world. And if you combine both together, and this is the future that we are looking into. Okay? So what is decentralization? Decentralization can be in governance, can be in execution, can be in geographical, can be in technology. So decentralization is not about getting rid of the central authority. Okay? So here, decentralization is a dynamic process. There's a different degree, and offline and on-chain. Okay? So there are a lot of differences in here in decentralization. It's a continuous process of distribution of trust. And why do you need to do that? Because once you go on the virtual world, as I mentioned before, somebody can just take over and that element can be malicious. So you got to work towards continuously distributing a trust and make it more and more cyber secure. Okay, but offline, you're still a central authority. Okay, so a decentralized system is one which requires multiple parties to make their own independent decision. It empowers individual decision and retain the dignity of individual, and this is very important. And it doesn't have a single point of failure. It's not have a single. It doesn't have a single. Okay, so I'm going to skip this. Okay, I'm going to skip this as well because I don't have time. But here, this is what is happening now. In the 1980s, we focused on production costs. So we minimize production costs. We use automation to minimize production costs. In the 1990s, with internet, we are trying to minimize the information costs. So nobody is going to pay for news now. We just go on the internet, we assume information is for free. Okay? And whether it's fake or not is another matter, but we don't pay for news anymore. So the cost of production has gone to very low, and the cost of information is almost zero. And then we tried, in 2000, we tried to reduce the cost of transaction. So capital flow is getting faster and faster. We have high frequency trading, high frequency transaction, and that reduced the cost of transaction to a certain level, almost to a level which is very low, but never less than 6% for remittance. That's quite unfortunate, right, on average. And now we come the blockchain, which is to reduce the cost of trust. How do we reduce the opportunity cost of mistrusting another party or many, many other parties? And this is the technology that will propel us in an untrusted world to see how we can work together and for the emerging market to grow. Now we can reduce the cost of capital to emerging market, where to enforce trust, to ensure that trust is being executed is very high. Okay, and hopefully blockchain and other technology can solve that problem. So it's about accurate incentive and design thinking. So why incentives? What can it achieve? What can't it achieve? And some other misconception. You have to come to game theory. So blockchain is not just a technology. Blockchain is not like AI. Blockchain is not like cloud. Blockchain is not like other. We have the A, B, C, D, E. A for AI, B for blockchain, C for cloud or cybersecurity, D for data technology or digital devices, E for environmental friendly technology. Blockchain is not like other technology. Blockchain is more than a technology because it involves incentives, it involves game theory. So game theory, okay, this is very technical. It requires players, like there are prisoners, there are judges, and it requires strategies. You require two criminals that got caught, and there's a justice system. Okay, so the individual who get caught has to have some strategy. Okay, and then there's the payoff. What do? I'll give you an example. But there's a zero-sum game and non-zero-sum game. Zero-sum game is that both of us are being caught, and if I confess, I'll go to jail for 4 years. Okay? If I confess, I don't go to jail I don't go to jail. He goes to jail for 4 years. If he confesses, I go to jail for 4 years. He doesn't go to jail. But we both confess, we both go to jail. Right? So we have to have a strategy. Should we confess or not confess? That's game theory. Okay? And this is the way people think in a trusted environment. Okay? And the zero-sum game means that, both of us has nothing to gain. Okay? If it's a non-zero-sum game, it's that I'm gaining in the expense of another person. Okay? So this is why it is. If I confess, okay, you go to jail for 2 years. Okay? Both of us go to jail for 2 years. We both confess. Okay? If B doesn't confess, he doesn't confess, I go to jail for 4 years. And if I confess, he doesn't confess, he goes to jail for 4 years. If we both not confess, then we don't go to jail. Right? So obviously, if we don't confess, that's the best outcome. But you will end up this way because both of us will confess. Okay? We both go to jail for 2 years. Instead of not going to jail, go to jail for 1 year. Okay? So this is where the outcome will be. This is what is happening because the incentive for us not to cooperate with each other. Okay, because by confessing, I have something to gain. Okay, by not confessing, I have something to lose. So the outcome is that we both confess and we both worse off. Okay, so this is one way to look at things, right? So in the case of blockchain, okay, there are forks which I won't talk about, but it's incentivized that everybody will join the longest chain. Okay, there are some, but what I want to do is now to talk about smart contract. Okay, there is a so-called a reverse game theory. The question is that this is the outcome that we both go to jail for 2 years. How do we force an outcome where the entire community is better off, the entire society is better off, and not worse off? Okay, right? So how do we ensure that that's the case, right? So there's the difference between game theory and reverse game theory. Okay, now the reverse game theory, what we try to do is to design reward system for technology to do good. In other words, we're trying to force this outcome. Okay, how do we do that? How do we do that? How do we make sure that there's no tragedy of the common, that we will both consume, okay, and take care of our own interests of the environment is worse off? How do we ensure that we don't abuse the environment, okay, in the best outcome? This is how we do it using smart contract. So this is what we do. Because we are non-cooperative, smart contract is a digital contract, or sometimes it's not a contract. And what it does is, I give you an example. If tomorrow today is raining. Tomorrow, if it rains more than 6 inches by tomorrow, my crop is going to be gone. So I need an insurance. So I go to Malik and say that, why don't I give you $10? If tomorrow at 12 o'clock, the rainfall is more than 6 inches, can you give me $100 to compensate me? So he's my insurance agent now. My $10 is a premium. And both of us will, if it doesn't cross 6 inches, all the $110 you can keep. So I will put $10 into, usually what we do, right, is that we have a lawyer, and then our insurance agent, we put $10 there, okay, he put $100 there, right? At the end of the day, the insurance agent at 12 o'clock will look at the National Environmental Authority and look at the website. Okay, it's more than 6 inches of rain by 12 noon, right? So I will get $100. He will get the $10 premium. If it's less than 6 inches of rain, he will get back his $100 and the premium of $10. So $110 will all go back to him. But what if there's no central authority? That we can have a digital contract, that all of you are witnesses, okay, that you can verify. So by tomorrow, 12 o'clock, you can go onto the website. If there's no 6 inches, everybody say that, oh, there's no 6 inches, right? Therefore, he will get back his $110. But if it's more than 6 inches, $100 will go to me, and $10, everything executed by computer. There is no middleman, and all of you are witnesses. So we disrupted the lawyers and the insurance agent. Okay. Now this is something which is called smart contract. A smart contract is not just merely a digital contract. A digital contract can be set up between two parties with a lawyer, right? But a smart contract is a digital lawyer with no central authority, verified by the community. That is the difference. Okay? You see the difference? So there's no central party. And I can then set up this smart contract to say that if we both confess, okay, it will cost, whoever confess will cost minus 10 token. Okay? Now the payoff is different, right? If we both confess, we minus 12. Okay? If I confess, I will lose 10. Okay? And he will lose 4. Okay, so there is a smart contract out there externally to move this outcome to this outcome. So the entire idea of blockchain is to make use of smart contract to ensure that there's another layer to enforce a good outcome. Okay? So this is important to understand that a decentralized system is important in the sense that there's no central authority that can be biased, there's no central authority that can be malicious, or there's no central authority that can be rational, that works to his own interest because he can be bribed. Okay? So the entire system that we are trying to build in blockchain is to increase the cost of collusion, to increase the cost of corruption, to increase the cost of biased decision, to have a pre-contract to do so. So the design thinking is to impose costs to minimize such occurrences through a smart contract. Okay, so this is important, and therefore it has to be driven by the community. It has to be driven by international organizations besides the government, because they have to be driven off-chain by a neutral party that's not biased towards any of these countries or this justice system. So it's key to that. Yeah, please do.
So I just wanted to add for 1 minute to what Professor Lee just so elaborately articulated about game theory and how it relates to smart contracts. And I know many of us understand game theory, but it's a slightly complex concept. So if you go back to this prisoner's dilemma in game theory, basically, as he articulated, both the prisoners are actually choosing an outcome which is not necessarily the best for them, right? If both of them don't confess, neither of them goes to jail. But the problem is, as he said, there's a central authority. In this case, call it the law enforcement officer, who's keeping both of them separate and talking to both of them separately. So it's like if Professor Lee and I are kept in separate rooms and there's somebody who comes to him and says, hey, if you confess, then I'll let you go, but I'll dock the other guy for 4 years or 10 years or whatever, so it's in your interest. But on the other hand, if he comes to me and says the same thing, you confess, I'll let you go, but Professor Lee will go for 10 years. But if you don't, the reverse also holds true. So you see how the system reaches this equilibrium, what is called as Nash equilibrium, which is not the optimal state for either of us, but because there is a central authority and there is a discontinuity, the equilibrium point is reached such that it is not the best outcome for either of us. And going back to this particular chart which follows up on that, basically this is showing how that equilibrium gets shifted, because now suddenly there is no central entity or third party, and then there is no, if I may say, disconnect of data between the two entities to ensure that a suboptimal outcome is reached, and therefore this whole idea of the outcome being programmed in a more cooperative fashion. So I just wanted to kind of give that little texture of why in the conventional model of game theory, the outcome is not, the equilibrium point is not necessarily the most optimal outcome, but here you can actually program it to reach that equilibrium. Thank you.
So you can think that as a society, and all the outcomes that we're having are not optimal. It's not good for all of us. It's not good for the earth. It's not good for sustainability. So this is the whole idea. We need to design a system that's good for sustainability. It is good for development. It is good for the general public. So the prisoner dilemma is just a very standard idea of when everybody is not cooperating and taking care of their own interests. So it's important to understand what smart contract and blockchain are trying to do. They're trying to do reverse game theory, right? Okay, in economics, game theory only look at what happens to the world, but reverse game theory are moving to design blockchain and smart contracts so that we move the equilibrium back to where we want it to be as to the benefit of society. So you can see that good blockchain design reduces the opportunity cost of mistrusting other parties, and token incentives incentivize untrusted parties to cooperate, and thus good blockchain design reduces the cost of trust, defined to be resources used in negotiation, execution, and enforcement. So in places where enforcement is weak, execution is weak, it has the advantage of reducing the cost of trust. So this is very important to use technology to do that as much as possible. So this is smart contract. I'm not going to say too much. So I think you got the answer. Is blockchain a technology? Blockchain is more than a technology. It involves design thinking that and as well that it will work in circumstances that will help us to entice people to work together. And it's about distribution of trust, and it is about decentralization, because it's a continuously distributing of trust. And this is important. This is what is going through in the world now. We first start off with digitalization, right? Like you digitize account in Myanmar, or account in Rwanda, or account in Bangladesh are very important assets for farmers. Okay, but the problem is that the cow can never define who the owners are. So the neighbors could just cook the cow to become a steak, And tomorrow there will be a lot of quarrel who owns the cow. And when a family, so the poor is not really poor. They do have assets, but this asset is not traded. So when somebody in the family falls sick, they cannot actually afford to own the cow. They need to sort of borrow money, and the cow becomes a collateral. And the whole cow becomes a collateral, and the interest rate in Myanmar is 100%, 3 digits. And in Vietnam, I think the maximum is about 20% by regulation. So how to solve this problem? First, you digitize the cow. That's digital cow. And once you digitalize the cow with a chip on the ear of the cow, you know where the cow is because there's GPS, so there's no quarrel of who owns the cow, where the cow is, and whether it's alive or not. Okay? And once you've done that, it's very important, okay, because you start to disintermediate the loan shark, okay, who charge 100%. How do you do that? Because once you digitize the cow with a health certificate on the blockchain, with the VAT certification, and this is not just a story, this is already happening, right, by a company. So what happens is that once you have the health certificate with certified by the VAT, and it's on the blockchain with GPS, then you know where the cow is, and the micro insurance company will come in and say, now I'm willing to insure the cow.